go. Happy Friday, everyone. Welcome to Finance Friday. This is the show where we give you the information you need to help you grow and protect your wealth. I'm Amy Novakovich.
Hi, Jim Novakovich.
And we are both here today to talk about the different emotions in investing and what to do about that. I actually don't know specifically. I feel very short. I don't know specifically what we're talking about. Jim is going to surprise me, apparently.
Well, yeah, Amy asked me what she should talk about today, and because I told her we would start doing, she would start doing these again regularly, and I told her I would come up with the topics, and I didn't have anything yet, so I'm like, well, I'll just do it with you.
Oh, there we go. And I can share it right here. See, and now I've got you to talk while I share.
Oh, good.
Because normally I'm trying to talk and share at the same time. But please share this out while we talk about this, and hopefully it will help others. Or if you're seeing it in the replay, also Friday Fun Day. Absolutely, Ryan. Are you on a boat? Hopefully, because it's nice out.
Which Ryan?
Ryan Bradley.
Oh.
But how do
Hello. So I just kind of dropped this on Amy. I haven't done one of these in years, and actually you haven't done many in years.
I've done the last 3 weeks.
Was it 3 weeks?
Yeah.
Okay.
The 20th.
All
I've done
right.
it since the
So
new year.
New Year's resolution.
Nope, not on a boat.
So I'm going to just ask you some questions. I thought it would be a good way to just have a discussion without...
The last time we did this, though, it didn't go super well.
I think it went really well.
Didn't you end up walking out of the room? Oh, that was a different one.
That was a different one. I've done that, though. I've left. I've left.
It's great.
I don't think I'm going to leave today. I think we're good.
Okay. Well,
So, all the time with the media, and it's not a political statement, it's just the media, and there is a lot of bad news out there, but I was, whether you're on the left side or the right side of the discussion, both sides can really paint an ugly picture of Washington. I mean, I don't know anybody that's happy with Washington.
or media.
Or the media. And
This is better than TV, right? Well, Jim thinks this is only going to be 5 minutes, so somehow...
This won't go long, because
we're already
nobody...
2 minutes in.
All right, well, we got to be finished in 2.5 minutes.
Oh, my gosh.
So, answer quick.
It's going to be at least 10. We'll see.
We'll see. So, how do you handle that phone call when somebody calls in and says, I think that the dollar is going to go away, and by the way, let me since I brought up the dollar, let's talk about that for a quick second.
Okay.
Part of the reason why the market went down in 22, mainly because of interest rates. The Fed is trying to head off inflation.
Yes. Well, and the Russian war and the China lockdown, but mostly interest rates. Yes.
Mostly interest rates. Something that is very rarely discussed is the strength of the dollar in 22. The dollar was very strong. It just kept chugging up
People
most of the year.
People don't know what that means, though. You have to talk about what the strength of the dollar means. You're saying this to a group of people, half of them out there are like, okay, he's already lost me.
All right, so as simply as I can state why the strength of the dollar isn't a good thing is because people from overseas, if the dollar's weaker, they can come over here and spend money and get more for their money. If our dollar is high, very simply, they can't buy as much. They can't travel here as cheap.
See, now that makes sense.
That's that's the simplest way to describe that. So in 2022, the dollar was very strong.
In comparison to other countries, though, because a strong dollar is contrary to inflation. Inflation is that the dollar is not worth as much.
Yes.
But how can you have a strengthening dollar at the same time that you have a weakening dollar? It's only because it's in relation to other places.
Well, yes.
Right?
And that's the only way.
You say, of course, but I'm telling you, people don't know this. Okay. Oh, hi.
That's fair.
Hi, Dad. I don't know.
Oh, my dad's on there? Oh, hi, Dad. You should have him on and interview him.
That'd be great fun. I was at the car dealership with him last night. That was something. That was good. He's just telling them how everything, they're just wrong.
I think he was right, though.
I think he was right,
I think he was. Anyway.
Okay.
So we were talking about the strength of the dollar. So, since around, I want to say it was like around December 22nd or so, that's when the dollar started weakening a little, and it has been coming down, which is a good thing for the stock market anyway. It's a very good thing, and the country, I would say.
Okay. We're already at the 5 minutes. I don't know. You're talking about
Don't worry
emotions of
about
investing.
I know.
Are you talking
we're
about the
just.
dollar? Okay. I'm just
You want me
being
to-
patient. No, I go, please.
When
go.
I said 5 minutes, have you met you? There's no chance.
I go like 14 minutes, 15 minutes.
Yeah, there's never a chance you're going 5. I say I was saying 5
And we'll see how long it goes.
to hope we can get out in 15.
Okay. Okay.
Okay.
I go 15.
I don't know about that.
Well, you were talking on a tangent about the dollar, and you said you were talking about emotions of investing. Okay, so we're
No,
listening.
but that's
We're
why
listening.
that's why I brought that up. Is there's people out there who have certain media outlets on, and they're scared to death that the dollar's just going to go away.
That's on both sides, though. I get that phone call from people on.
No, I know.
Oh, okay.
I'm not making this political.
Okay.
I'm saying
I felt like you were
how do
making
you
it
how do you
political.
handle the emotions of the media scaring people, whether it's
That's
the
their
dollar
job.
going away or
Right.
talk about that.
Okay. Well, by the way, that's their job because nobody's turning the TV on at 5 a.m. first thing when they wake up if everything is hunky dory and fabulously great in society. Their job is to sell headlines, to sell airtime, to sell commercials, and they can't sell it if everything is fine. So they have to scare you because then you're going to turn it on to make sure you know what happens. They have to make you, I don't know if it's fearful, they have to make you interested, and unfortunately, like our human nature, if it's something that's just like easy or expected, then we're not going to pay attention. But if it's disruptive and if it's dramatic, we're going to pay attention.
Yeah.
So that's what media does, right?
Yeah.
So you asked me how I deal with that phone call.
How do you deal with the phone call?
Right, because we do get phone calls of people that think the dollar is going away and the gold standard is coming back. But I would just like to say that would be really difficult in this technology world to have the gold standard come back. But
Actually, since you're on gold,
yeah,
where would you guess? Now, gold isn't something I follow it on the playbook. Simply,
which by the way, I was going to show you.
oh,
They can't read it. You're
no,
okay.
No, I know.
Okay.
They can't really see it at all.
No, but my point was, it's a lot of stuff on there.
There's a lot of stuff.
Yeah.
Where would all you out there? Where would you guess all you thousands of people who are
All
watching?
the people.
I think there's probably 2 people watching. Maybe. Are there 5?
Right now.
Right now.
People watch it later.
So,
They're working.
where would you guess gold is in 22? How do you think?
Well,
gold
I
is?
know.
Oh, you do?
That answer.
Okay.
But I'd be very curious to know what other people think if they would post the
Because I think the impression would be when and historically when everything's really crummy like 22, you would imagine in the past gold has done quite well when equities or stocks go down, and this last year gold was, I want to say, up to
Pretty
or
even.
down to, yeah, it was right
Close to the
around
same.
break even for gold in 2022.
in a time when normally people would have flocked to gold, like inflation
I can't
and
see anything anymore.
well, then put on the glasses. That's what you have them for. But
Down 1%. in
Down
22.
so yeah, well, and Ryan said simply put, you hire a quality firm to take care of your dollars or your gold. Well, yes, but I guess this is also just trying to calm some people of fears when they hire somebody, right? Because they might just think they need to put it all in gold and not have anybody manage their money. But you can buy gold now in an ETF, which if you don't know what that is, that's just a fund. It's like a stock on your statement, and it mirrors the price of gold. So you don't have to go paying commissions and paying storage fees to store gold or physical blocks of gold. You can just buy it in the market very easily and sell it when you want to. So yes, we have put some like in commodities or like gold and silver, like just in these funds, right? Instead of purchasing it for clients so that they can hold gold. But the story of the gold standard coming back, and I do get those phone calls of people in such a panic that they think they need to store money under the mattress or they need to. And if that has been the case, I think since I've been in the business, has that been the case since you've been in the business? Since you've been in the business,
What,
a
those
little
questions?
already?
Those questions?
Just people thinking that they need to hoard money or hoard gold, money going under the mattress.
Some people, yeah.
Yeah,
Yeah,
since the
it
beginning.
happens.
Since over 20
it's
years
not
ago.
a new thing.
Right. people thinking that they need to just hoard money because they think that the world is going to end. I mean, that is, again, that a lot of that does come from media, but there's always a reason to panic in the market. There's always a reason. So now, coming off of a not great year, it wasn't a great year, but the market has its cycles. So now it's more about, like, what do you do about it? That's how, and so to answer your question, long-winded answer to answer your question, that's how I handle that phone call, is talking less about just like why somebody is panicking and more about what makes sense to do moving forward. Do we feel that that is really going to be the case moving forward?
Right. And a lot of our discussions coming off an awful year like this, a lot of people say, should we get more? Because the news doesn't seem to be getting a lot better, although I would disagree that the news isn't getting better, even though
Well, China's reopening.
yeah, there is definitely good
And
news
interest
out
rates,
there.
inflation is peaking, or at least turning a little bit. So interest rates are starting to not come down, but they're starting to plateau. Hopefully they won't raise so much. So I mean, the news is not getting worse,
And
I'll
the-
say that at this point.
and-
Unless the something with the Russian war happens. But
Yeah.
That
The
matters.
with earnings season coming up, the guidance has been, they've all brought their estimates way down, like way down. Actually, Netflix
can I
just
stop you for a second?
sure.
When you say like the guidance,
Companies, even though they shouldn't do it, and a lot of them don't want to do it, they have to give some indication of what the quarter is going to look like. And I think they're all getting smart in that they're just guiding lower, and that hurts. Months ago, when they would give an estimate of what the earnings are going to look like
for the next year.
for the next year,
I thought you said
or
quarter.
even the next quarter. Though I mean,
okay.
it's
We're
yeah.
talking about just quarter, but mostly, yeah, it's like future year. Yeah.
So if they paint an ugly picture, last year they were painting ugly pictures. It hurt in that short term. It really hurt. I mean,
Yeah.
there was months on end where we had, there was a few months where we were down 9-10% in a month.
Yeah.
The market was.
That's not fun.
No, but that's behind us, and the bad news has already been painted. So any earnings beat is going to do really well, and Netflix is a perfect example of that. They guided much lower, and they blew it out of the water, and
And now they're up.
now they're up. There's a lot of companies up today, but even in the aftermarket yesterday, they were up like 6 to 8%. It was bouncing around.
Yeah, so when you're managing your emotions overall, like if you're watching, I don't know if you're watching individual stock, maybe you're not even managing your own money, but just to manage your overall emotions, things change so much day to day in the market. Like we always say, like don't get caught up in the short term. And then what would you say short term means? Does it depend by age, or is there just a bracket of this is short term?
I would say short term is a year, 18 months.
Let's say the next year.
Yeah.
Yeah. So in the short term, in a year, I mean, look at it this way. If you're just retiring, your retirement could be 20, 30 years. What's one year? Or if you're 95, and you say short term, I don't have that much longer to live. Okay, well then this is really just going to heirs. Like what does this 1 year matter? Because then it's not going to matter to you in a year. That's short term if that's what your thinking process is.
Right.
So I would just say either way, 1 year is what I wouldn't get caught up in. Unless the one situation is if you're going to spend the money and you're certain you're going to spend the money in the next year. Then we need to think about it.
Yeah, well, then that
But
money
then that
shouldn't
money
be in
should-
the market anyway.
Okay, yeah. Well, that's what, yeah, for sure.
Yeah. So,
Agreed.
so that discussion, when people come in and say, the news is still bad. Should we get more conservative this year because things might not be better? I think we're leaning toward no. Although, when clients ask us that question, it's almost a no-win situation for us because if we say stay the course, and the market gets pounded again this year, then we should have said go to cash or
course.
go conservative. If the market bounces and we make it conservative and the market bounces, then we
Still
missed
our
out
fault.
on the recovery. So it's really a no-win.
Right.
So it always comes back to time frame. Short term, if it's a short term goal of 12 to 18 months and you're going to need this money to buy a car or a down payment on a home or some major purchase, it should be in treasuries, and treasuries right now are very good. I mean, we're picking up, or even CDs around the country. We can find CDs nationally where we're at like 4.5 over 8 months, 7 months.
Well, and they want you to keep your money shorter term. Longer term rates don't help you. Like the longer you go typically helps you. The more long you usually lock in the money, the higher the rate usually that you get. For example, if I do a 1-year CD versus a 5-year CD, most people would think, oh, the 5-year CD will pay more. That's not necessarily the case right now, especially in bonds. In some CDs and banks, they just want you to keep your money shorter term, so that it's called an inverted yield curve. It's actually the opposite of what it normally is or what it's supposed to be. So how can you benefit from that? You keep your money short term. You find the higher rates for the shorter term time frames. Like we've been doing it for some people for 3 months, 4 months, 5 months, laddering just out to a year and getting those better rates if we can, but yet keeping the money shorter term. But going back to, if you're in a panic, then do something. I mean, you can take action by buying when the market is down. Like if the real estate market tanks, right? A lot of people know, oh, I'm going to run out and I'm going to find some properties to buy. But for some reason, they don't feel that way with stocks. I don't know.
True.
I don't know why or what the difference is there. If you think you know, I mean, I would happily enjoy your comments.
I know.
But most people know that. Like, oh wow, if real estate goes on sale, I'm going to pick up some properties, or I'm gonna buy land, or most people do think that way. But for whatever reason with stocks, is it just because maybe you can't physically touch it?
That's it.
Is that what you were going to say?
That's it.
You can't physically touch it or physically see it. There used to be stock certificates, but now even those are gone. It's all electronic. So maybe that's just it. However, it's still an asset. And if anything, I guess like comparing it to Apple, like Apple or Amazon, I mean, $1 trillion companies versus owning like a property where you have a risk of robbery, somebody destroying it, a fire, a natural disaster, mold, whatever. I mean, the list
You're
goes
not
on
saying
and on
don't
and on.
own real estate.
Oh my gosh, no, I love people that own real estate. I'm just thinking you need to think of it in the same way. That's all I'm saying.
Right.
I'm not against owning real estate at all.
Yeah. The equity markets are very irrational in the short term. A year like 22 was really crummy. Amazon was down 50%. Google was down 39%. If any of us think that Google and Amazon are going out of business, then somebody needs to have a discussion with you, because that's not going to happen.
It's a big deal.
It's just an opportunity. So we should be buying those companies on these dips. Oh, I shouldn't give a recommendation.
Please don't.
Were you going to yell at me, or did you miss it?
I don't know. I don't think I had absorbed it yet. I was thinking of like
As soon as it came out of my
mouth.
mouth, I was like, oh boy, I'm going to
These are not recommendations. He is not saying to run out and buy Amazon and Google, because you can't say that to a blanket of people
No, I
who
cannot.
don't know.
Of course I can't. That was very wrong of me. I apologize.
Can't do that. We're at 18 minutes.
Yeah, I know. So maybe we can just pick up with this next week. Maybe I'll do more of these. I don't totally.
There's
hate
1
it.
minute, like little 1 minute things on Instagram that I think people really liked. Like a little 1 minute daily, or they weren't 1 minute, they were like 2 or 3.
I don't know how to do Instagram. I just don't. Well, you had a hard time getting the live this
Because
start.
Facebook, I mean, Meta changed everything, and I just haven't been able to figure it out since. Anyways, okay, are we done for today, though?
Yeah.
Okay,
that was
so
cool.
we'll definitely be doing this next week. Hopefully, Jim will be here. Hopefully.
Well, we'll see. All right. Have a good weekend.
Have a great weekend, and we'll see you next time. Bye.